Good morning, everyone, and welcome to NFP Day. And we do have some data that's come out. You can see here the Eurozone manufacturing PMIs came in actually right in line with expectations here at 50-50. Now, we have had some tough news here in Italy. Boy, it took a pretty big drop. But French PMIs held steady overall. German manufacturing PMI a little bit down, but when you consider everything overall and the prize we had, not as bad. Let's go and move this out of the way. And we got the euro holding steady here. We've come down. We did the Asian analysis. I'll just pop into this one quickly as we do the overview. I always put my analysis in just basic technical. So when you look over here, it says the euro has retreated back to the daily breakout level of 1445. Longs can be initiated. Support is a daily close of 1397. So if we get that dip back, that's would be the support. Resistance is right now for 1495. So let's go move into the euro. Now, we've been talking about this 1445 even earlier in the week because look here, you can see here where this is keeping the market in check. I've had this drawn out, I believe since the prior week. But you can see here how this 1445 was keeping the market in check. Matter of fact, the day before the Fed announcement, we made this run up here. Remember, we were talking about, I was expecting the market to go and run out of gas and thought, okay, they might stretch it to 1460. We'll probably see a bit of a pair back. We did, not as much as I would have thought as far as a pair back, but we did. And of course, once we got about 1445, everything was open for this to move higher and still move higher. It has the opportunity to move higher here. But we did go in and retreat from here as we came into the U.S. session. One of the things I think the reason why we did go on and retreat earlier, and I had posted that story, but I don't have it right now. ECB's Weidman was expressing concern for a continued slowdown. Matter of fact, I'll just run into this real quick because I think that's part of the reason also that all of a sudden the year was holding up okay, and then all of a sudden it just started sliding. I thought that was important. ECB's Weidman, the Germany's economic slump will be deeper and longer than earlier thought, and the Eurozone is likely to undershoot its 2019 inflation projection. Bundesbank President Jens Weidman said on Thursday in an unusual gloomy outlook. Weidman has always been such a hawk. Germany has been the engine of the Eurozone's recovery, but growth has unexpectedly stalled. A protracted slump could spread weakness across the currency bloc and may force the ECB to give up on its plans to dial back the stimulus. I won't go any further in here, but the key thing is, and let me move this here, and that's why I just wanted to highlight that, is I think that's really what opened the door for us then to slide lower. And we'll take a look here as we do an overview ahead of NFP. And we were just sitting there, just holding our own here, and all of a sudden, whoop, we just start to slide back. And notice here that the hour that it did that in. You see that in the 10 o'clock hour, and then we just started dipping. So I think that's what really got us starting to pull, ultimately pull lower. Going back here, though, and one of the things, and the reason I put it along at 1447. Because on the pullback I was looking at, and I shared that the 61% of the range with the 1406. So we look here. There we go. So we saw that 61% right in here. The market has kind of held its own. It bounced around a little bit. But one of the things that I think that I wanted to go in and focus on, I was sharing with some people yesterday, is if you look at this, and on the way down, I mentioned this as we were moving lower. I know some people wanted to buy at 1460, and I was waiting for that 1447. I had reason because of the 61%. But if you look at, I looked at it, and sure enough, I'm not a fractals guy, but look at this move here. This is the last move we took off. It looked like Euro was going to the moon. To the moon she goes. And then we saw this pullback, and then a pop back here, and then also we fell back. If you look, this is eerily similar, but in a more condensed format. You see this run up here? We take another run here, okay? Then we drop back. Here's that drop back, and here we pop back one more time, which takes us right in here. We look here, and so what I'm looking at in here is maybe just to move to around the 1490-ish, and they're going to probably have some trouble. And then that may open the door for us to slide back. The thing is that on the way down, and people are like, wow, it's still solid off, but I don't know if it'll make it this far down. To me, then what made me look back at the last time was it was reminiscent of what happened the last time when to the moon it goes, and all of a sudden we start sliding back down. And then we took one more last run up here, and then we slid more, and then, of course, we gave up all those gains in short order. But obviously there was a good reason, because I believe at the time that was because Weidmann, you saw that in that time zone or time bar, he was given a rather gloomy outlook, for Germany. So I think, to me, even though when we did the daily analysis, when you look at this further, and I did this from the prior day before, yesterday, but the prior day before, we talked about this moving higher. Certainly the momentum's going. You can see here with the exponential moving averages. So what we're looking for, someone had asked me, this was the prior day before that, hey, where do you see something, as far as developing? I said, well, look, you'd be looking for a pullback to the 1445 here, which we got. And I was saying this might just happen just on a quick move, but obviously Jens Weidmann did some damage there. And then I said, well, you're stopping. I think I mentioned 1397, but we think I mentioned here, like I said, the analysis we're doing for NFP, 1396 on a daily support close, okay, which comes in right there, okay, a daily support close right in here, right there. And then the targets would be 1550 or 1552, I think it was, with the secondary target here at 1609. Well, the euro might have a tough time trying to get there. It may still eventually. I think it has to do more with the dollar sell-off as opposed to a euro advance. So we'll see if we can get the dollar to go on pair back more. But to me, following that, and I'm not a fractals guy, but to me, it would suggest some trouble if we make it back into the 1495-ish area here, right there, right in here, 1488, 1495-ish area here, and then I'll see if the market can prove its own. Now, when we looked yesterday, remember our bias chart resistance was 1531. Remember how 1531 is just absolutely a huge level here. See that? So let's just quickly move into the morning bid, and then we'll jump into the analysis. A lot of it's already done. It was posted in the basic technical already, and this is in a sense when we already done it, and the market there hasn't been any huge moves. We'll probably be able to run through that. So I just want to touch off. We mentioned that going forward we'll keep the news probably relatively light, but what are some things that when it's warranted will kind of set the tone, especially on a big day like today. Let's just go quickly through the morning bid. Manufacturing readouts from key economies around the region this morning will show how factories fared in January under the clouds of trade tensions, Brexit uncertainty, and volatile markets. Analysts expect the Eurozone index to hold steady, which it has so for the most part, but see a marked, if not dramatic, fall in the UK one. Ireland's reading activity already out this morning slowed to its lowest in over 2 years, and one of the first signs that Brexit and a loss of momentum globally may start to hurt its booming economy. Specifically in the UK, some of the real economic impacts, economy impacts of Brexit are hitting home, with an employers group survey today showing almost a third of British companies, even smaller ones, are either moving some operations abroad or considering it. Meanwhile, the anecdotes abound of consumers stockpiling food and medicine out of fear that a no-deal Brexit will strangle supply chains. While such contingency plans may be very real, a cynical eye might also note that these are precisely successfully the sort of dramatic headlines that may help PMA focus the minds of lawmakers on securing some kind of deal and to ready the public opinion for a messy compromise. There'll be many more to come in the weeks ahead. Now in the twilight of her political career, German Chancellor Angela Merkel has signaled she intends to use her remaining clout to rescue the world system of rules and governance from the likes of Donald Trump and Vladimir Putin. That was the main thrust of her stout defense of the post-war multilateral order in Davos last week. It'll be a long theme when she heads to Japan this week. She'll be holding talks with PM Shinzo Abe and an ally in the drive for the rules-based geopolitics. While rhetoric around this push is inspiring, it's not clear whether it's backed by a detailed game plan. Oh dear, the MSCI World Stocks Index, best ever January. We get a reminder of why the Fed, PBOC, and others are backtracking from policy tightening. The Caixin Market Index showed Chinese manufacturing at its lowest level from February 2016. Still, it's not looking too bad. World stocks are down just a bit from the 2-month highs touched yesterday. European markets are moving, opening higher, and Wall Street futures have crept back into the black. Possibly, markets are choosing to focus on Trump's promise to meet with President Xi Jinping to seal a comprehensive trade deal. U.S. negotiators report substantial progress in the talks, and Beijing's trade negotiations said the trade talks have made more important trade progress. Risky assets will get a boost from falling U.S. yields from the Fed's dovish pivot. 30-year yields below 3% and 10-year yields at 263. Aussie dollar, a proxy for the Chinese risk, is the main victim of the Caixin data. So let's just go and move on to here. Aussie dollar slips from the 2-month top after the China PMI. That gauge of factory activity was more downbeat than an official version of the index and fanned fears of a steeper slowdown. Aussie was at 72.39, a level not seen since December. The currency is up 0.8. Let's quickly move on down. Prices have fallen by 7.6% from their peak in 2017, which puts the current downturn on the cusp of becoming the largest on record in Australia. We believe this downturn will result in weaker dwelling investment and slower consumer spending. UDI expects the RBA to cut its cash rate from a record low of 1.5 from earlier this year. The RBA will hold its policy meeting of the year on February the 5th and is widely expected to leave rates unchanged. So Governor Philip Lowe has held a glass half full review of the $1.8 trillion economy. So let's go and move on. For the overall, the offshore yuan was headed for its worst daily decline in over 5 months on Friday after weak economic data. China's gloomy factory readings have brought global growth worries to 4 again, which is likely to benefit safe haven currencies such as the Japanese yen. February starting with a slew of weak manufacturing data across Chinese sensitive parts of Asia. So remember that the risk rally in emerging currencies and generally is a build on wobbly foundation, says Societe Generale's Kid Jukes. The Australian dollar, proxy for China risk, was the main victim, falling 0.5% to 72.37. Markets are now focusing on the U.S. jobs data later on Friday. Analysts note that any weakness in the labor market and a fall in wage inflation would only reinforce the dovish outlook for the dollar. The outlook for the U.S. assets remains relatively uncompelling, and investors should be shopping value elsewhere, said Hans Redeker. A weak U.S. equity market outlook should keep low yielders such as the yen and Swedish crown supported. And let's go and move on. And we'll close out with these two. Well, I already mentioned about Jens Weidmann and his concerns. The Bundesbank will be predicting Germany. The Germany will expand 1.6% both this year and next. But like I said, there are some, flies in the ointment, and certainly some more than flies in the ointment, some concerns that I think drag the euro from, the 1480 down to this daily breakout area. So today will tell a lot. So, but one thing in regards to these PMIs, it did say the Italian manufacturing activity contracted for the 4th month running in January, and it actually was the weakest PMI of the bunch. Fell to 47.8 from 49.2 in December, but that's Italy, and all the problems they have there. So, although the PMIs are certainly under duress, I think the Italian PMI is more on the other side of the spectrum in the sense of being very weak. The Eurozone's third largest economy fell into recession at the end of the year. Data showed on Thursday the PMI report shows a recovery is not likely in the near term and things could get even worse. Sub-index new orders fell to 46.5 from 47.8 the previous month, remaining below 50 for the 6th straight month. So once again, not really a whole lot of news since it's Italy. as it's been weak all along. That's my point. So let's go on and get ready for today. Okay. Here was our support. You saw that 1446, and we took that dip down there. And that was our daily breakout level. And you can see we're kind of holding here. Let's go and look here. So where do we stand as we come into today? Well, $15.31 is very important. We talked about that yesterday. You can see that coming across here. And that's on a 2-hour chart, but you can see the significance. You even have to pull it back a little bit further too. You see how the market run up after this huge fall, ran up to 15.31. It was just holding there. We popped above it. Then it was support, battle zone here. We rally back up, support, then resistance. So you can see the significance of 15.31 if we get there today. It's certainly, I believe, an area for a pause if we get there. But another thing that we focused on, and we started that at the top of the telecast / webinar. We mentioned how the this market was eerily similar on this last run up that we saw here, and how it ran up, and you see the same thing. And yesterday when it was falling apart, and we weren't really falling apart, but we were sliding back with a little bit of steady momentum, which I already referenced the story for Jens Weidmann. It's actually coming in right during that time bar. So it came, that was the result of Jens Weidmann's assessment. But as we pulled back, and then we kind of hung here, we did have this pullback, kind of hung a little bit. We made one more last run up, and then the market rolled back down. That came in right around here. So to me, would come in right around this here, 1480, 1490, maybe 1487. So as we look into today, to me, on a short-term basis, resistance is going to be 1486, and that's not even that far. But I think that's going to be the 1486. Maybe we push it up to 1495. You look here, and once again, I'm not a fractals kind of guy, but the market did have some tough times here. So one moment. It's maybe right there. Maybe 1490. 1490. So what we're going to do is, I'm going to call it 1488. You can go 1488. So initially it's going to be like this as we get ready. My thinking is, and that's what I was thinking here then, folks, when we were sliding back down, they were like, wait a minute, I've seen this movie before. Now, there are going to be some longs that they're long here. They're long right after the FOMC. Remember, here we are here, and the market wasn't giving anything back. So once again, that's why I'm thinking any move to the 1487-ish area here, you'll see some people drop off. Now, at this point, I'll be one of them that's going to drop off, because I'll let the market prove its own self. And if you want to go back up in here, then okay, great. Then we'll let it ride again and see if we can make that move to 1531. And we've already covered that here. And we can see the significance of 1531 come across. Now for support. And this is, I don't want to go overboard. We'll just go right here for support at 1407. 1407 for support. Let's go move into cable. Well, we had 3160, 3030. That's going to be resistance right there, 3168. That's a pretty good little fall there, but that's where support would come in. Boy, we've had one kind of a run. Yeah, we'll go right there, 3020, 30, 3027, 3027 here. We had 3030, so it's just moving it 3 pips lower. On the upside, we're looking at 3168 here in the cable. Let's go and move into the Aussie. Now, the Aussie took some slumps. Oh, okay, there we go. Still holding up very, very well. We'll take a look here at the analysis we did here. Okay, with 2 consecutive daily closes above 72.33, the door is open for a challenge to 73.29. Mark will likely take a breather at this level. Support comes in at 72.14. You know, we didn't pull back that much considering as bad as the news was. So you're looking here, looking at the daily. We're up here at this 38%. And this is what I was talking about. We had 2 consecutive daily closes above 72.33. And I guess that's where they went back and, you know, to this support here. I wanted to give it a little bit more room. That's why I did 72.14. But you can see right here, they just came right back to the breakout area here, this key level here. And the market's just eased back, but with 2 consecutive strong daily closes, it certainly does open the door for 73.29. That would be the next technical target. But let's take a look what we are for today, because we did get that bad China data, and you know, I'm surprised we're able to still holding up this strong here, which I guess is a testament to what they're looking at. Let's see here. We had 72.14 as our support. It's held up very, very well in light of that. Here's where we came in. For today, we're just going to move it just a little bit lower, 72.11. And looking how well, it's going to be important that we hold above 72.33 on a daily. That'll be important. So they may work to try and defend that. Let's put that here. And looking at that, right there. Just make it 72.10. 72.10, just a little bit lower, not much. From what we were talking about on the analysis, 72.14, so just a little bit lower for today, the NFP. Resistance. This market's holding up very well in light of that China data. That's a long ways to run unless the dollar really comes under some pressure, which I was saying to 73.03, especially in light of the China data. So we're just going to bring it down here. And that's not even very far. That's only 20 pips away. As much as I don't, it's holding this momentum here. We'll just go right there, 72.98. Let's go into the dollar CAD. The dollar CAD, and like I said, I think, I don't know if it was Steve or Stelios here talking to yesterday. It might have been Steve on Face, and obviously he's looking a lot lower. But my work is just more shorter term, so I don't have like a longer outlook. But so the reason I'm saying that, because I'm saying, at least from my work, dollar, and we had this target since the beginning of the week when we did the analysis as we came into the start of the week on Monday. But it says dollar CAD has reached its initial target, 31.20. Which is a 61%. Remember, we were looking for that at the beginning of the week. The next challenge target is 30.43. Upside resistance is 32.17. So we did make it down here, and this was the target we were looking for at the beginning of the week. Actually, it looked like it was trying to hold its own, and we saw this 31.52, but this was our target, 31.20 to 61%. Well, there's no arguing with reality. I mean, we're really staying, low. So where's the next area of demand? You'd have to see all these touches coming across here. You see that? That would be 30.43, which isn't that far away, but it's still, to me, I think then you'll see a good reaction, I would believe, but we'll see. Time will tell. I think Steve may be looking for down here at 28.75 or something like that. I don't remember that, but I remember him discussing, I think he was talking to Blake about that at the time, if I remember correctly, but on yesterday's webinar. Anyway, that being said, we've reached it here at 31.20. Well, but look where we're at. You see what I'm saying? So we actually got down to, 31.19. Actually hit it to the pip. So if we come in a little bit lower, where could we come in? Short term, it's going to be right there at 31.03. 31.03. You can see it coming right across here. You see that? That's going to be right there. We'll just call it 31.02. 31.02. Oh, that we already had it here. And upside. I think we had to do a little bit of work on this when we were looking back and forth, and I think we ended up sticking with just going with 30.80 because it's like we couldn't find anything that. Let me look on here. I'm at 31.80. Hold on. You know, we even looked at a half hour, if I remember correctly. And that is not that far away here. We'll go right there, 31.89. 31.89 here. You can see 31.82 is at 38%. So let's go once again 31.89. So we'll just call it 31.88. Just going just a bit above that 38%. This dollar Swiss is just hanging around here. Let's take a look at it here on the 2-hour chart. Find a little bit of up and down movement here. But when we look here into the going into NFP, we had 99.54 as our resistance, and they made it to 99.58. Since dropped off, so it wasn't too bad there. If the dollar gets its legs going on, it's going to be right there at 99.61, which is a good 30 pips above. Looks like the dollar Swiss is finally starting to wake up a little bit. For support, I still like that 98.92 right in there. So it's going to be support is going to remain the same here on the dollar Swiss, 98.92. We recovered the dollar CAD. We're going to move into the crude oil. You know, I posted this yesterday in the chat room because we do have a few crude oil traders. I posted this Gravestone Doji here on the 30-minute, and I said FYI, CC CAD. We stopped just a little bit above here. You see that? And then we hung here, but look, then you had like almost like a little mini hanging man. We'd already had a pretty good run. That's why I was saying, hey, look, we've got a little bit of a Gravestone Doji here because we'd already had a phenomenal run here in the crude oil. And then the same thing here. We had what this is referred to as a spinning top. And then the wheels came off the caboose for a good $1.50. So when we look at for resistance, that's coming in pretty clear. We'll give it some extra room right there. 54.10. 54.10. Support now Let's take a look at this. And one of the concerns we talked about yesterday was, it's running higher, but we're getting all these global growth concerns. So I wasn't sure how this is, it liked the FOMC, okay? But once again, you still have the global growth concerns. So then that was going to be, like pull it back down. It liked the FOMC, hey, they're lightening up, but wait a minute. Oh, then you wake up and it's still reality. You know what I mean? So hence we pull back. So I think that we can pull back down here to the 61%. If you look at it, this is where you start to see some demand coming in right there. You see these touches? So potentially we can come down here and run in here, some good demand here. You may see a bit of a bounce from this area here, but I think we'll probably end up making it down here to the 61%. But for right now, some good demand comes in. Guess right there. Let's call it 53 even, which is 30 cents away. $53 even. Let's go on and move on now to the dollar yen. Post FOMC, the dollar yen has relinquished the 927 pivot. The initial target is 815 with a potential on a dollar, when I mean a sustained dollar erosion, to 676. Resistance is going to be the 927 pivot. And we talked about that on the way when it was back on the way up, and it was able to eventually scale past this 927. And then we languished in here and looked like, are we going to be able to make this bust above 10? They got above 10 by about 2 pips, and the market was still acting like it want to move higher. Certainly, equities have continued to remain, strong, keeping that bid in here into the dollar yen. We're already above 27, but it wasn't able to hold and eventually start to slide. And obviously, FOMC day, we broke the pivot. Okay, so now that's what I'm saying. Support's going to come in at 815. So we're going to go with 815, or potentially where this market can go to if the dollar ends up losing a lot. Let's take a look on that. I think we're going to 815, but the resistance would be 927. That's not going to change. Let's see intraday if we can find something even closer. No, it's going to be that pivot, 927, and then we're looking for 815 when this rolls over, but is there something in between there? Well, that in between there is going to come in right there at 832. So we'll use that as our support for today, 832. But in time, I think we'll make it down to 815 for starters. Let's go and take a look here on the Aussie yen. Well, we had talked about this, and this market just holding its own so well, like it wants to go and just bust out. Now it hasn't, but we were looking before. Remember this? I don't know if we even marked it off. If we were to get there, I don't think we did, because we were looking. Watch for 79.56. We're saying, well, there it is. And we have 79.20. Now that being said, Look at this. I'm surprised we didn't even bust out to that 79.56. So a little bit of divergence in a sense, unless these spoos just want to like take one more launch. We're going to go with resistance right here, 79.33, and you would look at that 56 being huge. So it's going to be 79.33. Support. Boy, we're holding our own very well here. Support is going to be right there, 78.52. 78.52. And let's take a look at the cash dollar index. The dollar index is defending the trend line ahead of NFP. Initial resistance is 95.65 with a stretch resistance at 96.07. Support comes in at 95.03. A 2-hour close below 94.54 targets. A 2-hour close below would target 94.54. And I'm not referencing this. I don't know why I put this. We'll go back to that. Let's take a look here on the daily. Right here, the 94.54. That's not even saying much, but I'm talking about this 95.03. I think eventually we'll go lower, but a 2-hour close below that area right here would, and that wouldn't even be saying much. We just have to move 50 more pips. Well, that being said, and we're looking on the daily, they defended this trend line support. Remember on NFP day, and I was saying the support's at 95.35, and I just meant just for at that moment in time. And then I think the low was only 29. And then we kind of got up to 40. Then we kind of vacillated a little bit lower. We moved a little bit lower in the Asian session, and then we've kind of holding our own. We know the importance of the 95.65. That's huge. Matter of fact, I just mentioned that. And look, you can see that's exactly where the market went to and just kind of eased back a bit. Not a whole lot, but a bit. Okay. Euro's already at 14.63. So this is the initial resistance, because that's huge. Remember, like I said, we saw, heard me go over this back and forth to the point of probably ad nauseum. We had that fall down at 95.65, and then we saw that nice sprightly rally, and then came back, and then we lost it. Once we regained it, boy, the doors really opened up, and we went on our way up. And we came back. But during this whole time, we remained in the sell signal because you look at the exponential moving averages. So it's showing you that we were lacking for momentum. So we quickly ran out of gas, even though everything looked as bright as could be, and we lost this, and that opened the door for us to move lower. But like I said, the story goes, a funny thing happened on the way to the forum. I think Jens Weidmann is really the one who took the air out of the balloon yesterday. That's when we came apart. So initially, resistance at 95.65 and there's a 96.07. You see that? There's our big resistance, 96.07. That 95.65 is holding, but what is that? Just basically a spit away. So we'll take a look on a 2-hour and see if we see anything a little bit closer. We'll say 95.83, and then remember I point out that 96.07. So it's going to be 95.83, 96.07. Support. We're going to go with 95.23. Now we know the real support comes in at 95.03. Right there. But right now, going to NFP, it's going to be 95.23. And let's go move into gold. Gold has reached the 1323 level. Remember, that was that target we were looking for. Remember, we had it back before at 1304, and the market really held its own. We said, wow, well, and it kept taking stabs there. So we moved it to 1323, which is also the 78%. So it says gold has reached the 1323 level, confluence with 1322, the 78% of this entire move of 1160 to 1365. Immediate resistance, once again, if the dollar pairs back, would be 1334, because we've got to look at we reached that level there, but it was still holding its own, and we're moving into a key major report here with a major event NFP. So certainly, could they get a little bit more juice out of it? Yes. So we have to be realistic. The next resistance will be here at 1334. It will take a strong dollar sell-off to challenge 1350, because a lot of people are now pointing to that. Support comes in at 1315, followed by 1308. Let's take a look where we stand here on the cash dollar. Not cash dollar, I mean the XAU, the gold. And you can see the significance of all these touches come across of 1323. And that's where we ran out of gas. They pushed a little bit more, but they're having a confluence with 1322, the 78%. Can we push a little bit higher today? Yeah, dollar sell-off will probably juice it on up to right there. You see that? 13. There's 1334. You see that comes right across here. All these little touches. So we'll call it 1334. And we do have 1315. I'll move into the 2-hour chart. Right there, you see that? 1315. And I like to move down here to 1308. If for some reason the dollar were to turn around, then the gold may want to just take an ease and people cash in some of their chips. Goods are still holding up relatively well, but they have given back a little bit despite these weaker PMIs. So resistance. It's going to be right there. 65.38. We'll call it actually 65.39. This is interesting here. Now, Vitamin gave his 2 cents yesterday, and that sent the euro lower. Remember when we were talking about we were here and we were saying, well, you still got to be careful because, and I mentioned that yesterday. It used to be years ago, and I go, well, maybe not years ago. Let's say 3 years ago, where you would see you could trade the euro and the bunds inversely. So I said, be careful here because, we're still way up here. And obviously then the euro did pull back, but it was more of a result of Vitamin's outlook. That being said, Vitamin's outlook didn't send us screaming up here to new highs. That's interesting. And now we're starting to pair back. So when I say interesting, because now this is a line. Look, now see how the euro's on its highs over here? You see that? And the bond is fading back here. So that can open the door for us to move higher here in the euro. But my thoughts was the gold. But then again, if the dollar pairs back, it will allow gold to move higher. It's just I'm just looking at being a contrarian, thinking, let's say we popped up to 1334. If we did, gold might kind of stall there. Maybe next week we finally rotate lower. Anyway, that being said, let's take a look where we stand here on the fib. We did reach that target of 1323 on the gold, and that's 78%. I think that 1334 is about as good as it gets. I'm not kidding. And I have not been bearish gold at all, but I think it's probably due a bit of a respite. We'll go right there. I like that, 65.11. Okay, yesterday we had 11,264. They really tried to do if they could hang up, but they just weren't able to do anything with this, and they're struggling with resist support at 1079. We're just going to go right there with all these touches right here at 11,233. Support. I mean, I think to me it looks like we talked about this. Reality is going to start to set in. I think we're going to end up having to rotate lower. If we see a sell-off. I mean, you can make the case right in here. There's some short-term support, but 11,125. But to me, I don't think you should be caught with your pants down. I think they're going to go down to 10,020. Just for short-term intermediate purposes, we'll call it right there at 11,102. Well, the euro scooting. We already talked about that. Is that once again, I'm not a fractals kind of guy, but this looks eerily familiar. Look at this. Here. You get this sell-off. Here, down here. Then you rally back up to here. This little neckline is area. Not neckline, but here. That comes up to here. That's 14.95. So anywhere between 88 and 95. I think there'll be some initial resistance. My concern is that anybody, you see, when we had the run up in FOMC, nobody got a chance to go on and buy it lower once it took off. So you probably have a lot of people that got long and said, oh yeah, we're set now. So they're long right here from 1480. So you make this run up here. Some people might say, well, God, you know what? I'll take some of it off just in case I finally get out of the red zone or something. So that's why I think and I marked this off as initial resistance here, 1488. Then, of course, if we do get some moves up in here, I want to see the market prove itself. Is that huge 1531? And that's huge. Well, good luck trading, and we'll see you a little bit later on in the chat room. I'll go and post the buys chart, and thanks for joining us here on the European Crossover webinar.